Okay, welcome. We're going to have our look at a first class example on IAS 37. This class example will test whether or not you can identify liabilities that are provisions, i.e. liabilities that have uncertain timing or amount. Okay, so let's go on to our list of potential provisions. I've given you a list here that you're going to go through and work through after we've done a first read. So first of all, we've got our provision for bad debts. You will need to go and figure out if that's a liability, a provision, or what is it. Provision for leave pay. I said assume accumulating and vesting leave. Standard warranty to repair any faults that occur after the customer has purchased goods. A telephone bill received but not yet paid. Freight costs incurred on transport of goods to your premises but the invoice is not yet received. And an obligation to dismantle a plant and restore the site at the end of its useful life. Okay. Take a minute, push pause, and I need you to work through each of these and figure out if it's a provision or not. If it's not a provision, think about what it should be. Okay, push pause and do that now for me, please. Great, assuming you've done the work, let's have our discussion first of all about our provision for bad debts. Is this an actual provision? I know a lot of us have used this term and continue to use this term, but you are using it incorrectly. Okay, it is not a provision. It is an allowance account, a negative asset, right? It's an allowance for impairment losses. Okay, so you do not, no longer do you recognize a separate provision from today going forward, please. Okay, you will reduce the value of the trade receivable, the debtor directly. Okay, it's an IAS 39 and IFRS 9 issue, not a separate provision. So that is no. Provision for leave pay, I've told you, assume it's vesting. Ladies and gentlemen, this is an accrual, a full liability. It's not a provision. There is services that have been rendered to you as a company, and you can estimate reliably the timing and amount of those. So it's a liability, an accrual, not a provision. Standard warranty to repair goods that you sold to a customer. Well, ladies and gentlemen, this most definitely is a provision. You don't know exactly how much the warranty costs will be, but you can make a estimate. Okay. Yes, there's going to be some uncertainty regarding the timing and the amount of that warranty, but you can look back at the past couple of years of history and just use some deductive logic to work out how much you should raise as the warranty provision, and you'll change that estimate as you live and learn. Okay. The present obligation is the sale of the goods that will have a certain amount of those sales being faulty. Okay. Or those goods being faulty, which will result in repairs in the future. So you do definitely have a present obligation. Telephone bill received but not yet paid. No, that is not a provision. That is a liability. You know the amount and you know when you should pay it. Freight costs incurred on transport of goods to your premises. You have not received the invoice, but you would have definitely got a quote. You will know the amount and the service has been provided to you. It's an accrual, a liability. Okay. Obligation to dismantle a plant and restore the site at the end of its useful life. That is a valid provision because there's quite a bit of uncertainty regarding the amount and timing of these restoration costs. Okay, sometime in the future. Please, there's a little IFRIC on how to deal with subsequent changes to that provision, IFRIC 1. Okay, so which of the above liabilities are provisions? We're going to go with C and F. Okay, and here we go on the next page, C and F, as we've discussed. Okay, please go through. Yes, the aspects like provision for debtors will be a bit confusing now because we may not have yet done IAS 39 and IFRS 9. But you must look for the present obligation. There must be uncertainty regarding the timing or amount of the provision. Okay, if those items are there, Okay. Yes, it's still a liability, still recognized, but you recognize it separately as a provision and not as as part of the rest of your liabilities. Okay. Please, we did not test contingent liabilities here yet. Those can be quite tricky. Okay. But you need to go back. If you're battling with the concept of a contingent liability versus a provision versus the liability, go back to the previous lecture and review the overview once again. Thank you.